Is the US government planning to have its Rajinikanth moment with gold? Let me explain. Did you know that in 1934, it was President Roosevelt who could force a value on how they want to evaluate gold? Today, as you and I know it, the markets determine the price of gold. If that were to be repeated, and the gold, which is currently at $124 a gram, is going to be quoted at $480 a gram, how is that going to help anyone? There is a narrative that is emerging that the increased gold price actually is in the favor of the US government. The US government has close to around $37 trillion in total public debt. The annual interest payments is close to $1 trillion. And that comes to about 20 to 22% of the revenue it collects as taxes, etc. So if the $1 trillion that it needs to pay regularly to the Federal Reserve, if that were to somehow come down, then it will reduce the 20 to 22% significantly. And for that, gold, if its value were to go high, there is a way in which the US government can adjust its accounting books to benefit from it, is the narrative. Is that even possible? In 1934, President Roosevelt devalued the US dollar by about 40% relative to gold. Until then, every dollar had to be backed by a fixed amount of gold, about $20.67 per ounce. Roosevelt reset that value to $35 per ounce, effectively saying this small quantity of gold is enough to back every dollar in circulation. Let me explain. See, if the value of the gold were to increase and every dollar needed to have only $20.67 per ounce, essentially it permits US to have more currency in circulation. Just park that thought. That single move instantly made the Treasury's gold stock worth about 70% more in dollar terms and allowed the government to issue more dollars against the same gold. The new money supplied banks, industries with liquidity, revived lending, and this helped pull America out of a Great Depression. So, in short, Roosevelt re-anchored the dollar to gold at a weaker rate relative to gold, expanded the money supply without mining new metal, and proved that remarking gold can reboot an economy. It stands as a clear historical precedent in the US for using gold revaluation to restore liquidity and confidence. Here is the important implication. In the context of US, central bank is Federal Reserve and the ruling government runs the Treasury. So, Roosevelt's Rajinikanth-like proclamation resulted in the US Treasury's gold reserve, which is roughly around 8,116 tons of gold, suddenly become worth $9 billion instead of $5.4 billion. Hence, the Treasury issued gold certificates to the Federal Reserve at the new price. Now here is the most important point. The Fed credited the Treasury's account with the equivalent dollars. New base money created out of revaluation. This money requires no interest payments. The accounting logic is that the physical gold has no counterparty risk, meaning it's not like some bond or a certificate that will hold value until the underlying bond issuer or the certificate issuer proves the guarantee. Hence, physical gold is treated as cash by the Federal Reserve and hence injected the cash into the Treasury. Now let's keep this in the background and revisit history and provisions in the US law. Welcome to the Gold Reserve Act of 1934. This was enacted on January 30th, 1934. You can say this is the Rajini Moment 1. This was signed by the then President Franklin D. Roosevelt. There are key provisions. 1. This transferred all the gold and gold certificates, meaning the Federal Reserve banks, to the US Treasury, made the Treasury the sole owner of the nation's gold stock. Second, authorized the President to set the value of the dollar in terms of gold. Roosevelt immediately used his power to raise the official gold price from $20.67 per ounce to $35 per ounce. Next, it prohibited private ownership of monetary gold within the US. Individuals and institutions had already been ordered, some Executive Order 6102 of 1933 to turn in their gold to the government, but this was actually formalized into a law. Fourth, it also created what is called as a Exchange Stabilization Fund, ESF. This established with $2 billion from the gold re-evaluation profits. The intent was to stabilize the value of dollar and manage foreign exchange operations. By the way, this fund is still in existence today under the US Treasury. Now, if Gold Reserve Act was to pass, then US citizens will have to give up their gold. Now, this is a nuanced one, since there is also a repealing enaction in 1974 only for this clause. The key factor is that the provision of the Gold Reserve Act restricted private gold ownership was repealed in 1974, the date being December 31, 1974, which was signed into a law by President Gerald Ford. So what is the current law? Today, it is completely legal for US citizens to own, buy, and sell gold in any form, bullion, coins, bars, etc., and in any quantity. Now, let us look at the US Gold Reserve accounting price. The US Treasury holds its gold reserves, which again is totally approximately 8133 metric tons, at that saturating price of $42.22 per troy ounce. The price was established under the Gold Reserve Act of 1934, which was initially $35 an ounce, was later adjusted by the Congress in 1973 via what is called as the Par Value Modification Act. When the Par Value Modification Act of 1973 came into picture, the official price of gold was adjusted from $35 to $42.22 per ounce. Do you notice? Initially, the US government changed the gold price from a lower denomination to a higher denomination with respect to gold. And now, the gold price, it is increasing further from $35 to $42.22 per ounce. Now, this move will again generate fresh cash. And we saw earlier that the Federal Reserve will treat gold as cash equivalents. And so whatever is the extra worth of cash that is seen, in this case 1.9 billion, it was actually once again sent back to the US Treasury, and this money was kept into the Exchange Stabilization Fund, the 2 billion fund that was initially created. So this is again a Rajini moment number 2. Because that time the prevailing prices were quite different. The $42.22 per ounce was again not a reflection of the market. It was an accounting placeholder chosen by the US Treasury to replace the old $35 standard after Nixon ended the gold convertibility, a way to keep gold on the books without tying the dollar to its real market price. Did you know that in 1971, there was a Bretton Woods agreement that was broken by the US, and hence gold and the dollar were no longer connected. It is at this point in time that we have what is called as the Par Value Modification Act of 1973, which is another Rajinikanth movement, because now we want the gold price to be lesser than the market price because we want the dollar to look more powerful than the gold. Proposed Rajini moment number 3 is to evaluate gold at the price of $15,000 an ounce. For context, today gold is $125 a gram. And if the US reenacts the Gold Reserve Act of 1934, it can force feed the price to $184 a gram. Then, effectively, Federal Reserve will be able to inject currency into the US Treasury, which we know is a wing of the US government. The US Treasury holds about 8,133 tons of gold, worth about $11 billion on paper. But if we are to use the current market evaluation, it is actually $600 billion at current market prices. If the US Treasury were to forcefully reevaluate the gold price to that of $15,000 per ounce, then interestingly, the very gold is now going to be worth $4 trillion. This gives the US an enormous balance sheet boost. The $4 trillion is roughly equal to the entire GDP of Germany. The interest rate of the $37 trillion debt is approximately $1 trillion. So, with this accounting adjustment, the US Treasury, which is the US government, will have a surplus of $2 trillion. And most importantly, this act can also be repeated in the future, since it is like Rajinikanth quoting a number and evaluating the gold at that as a basis. So overall, sometimes, though there is an accounting feasibility, though there has been a precedent in the past, there are various perspectives on whether the US government would really want to do it. On one end, if they do it, it does not make too much of a difference because we can say the cat is out of the bag. Already the central bankers, in order to protect their interest, are collecting gold as much as possible. On the other hand, they may not even do it because they themselves will be sending out a strong signal saying that if they were to admit that gold is actually something that even they respect and hence the dollar will have to adjust and be subservient to gold, then in a sense the brand of trust might get impacted, could also be a valid perspective. The third possibility is that the narrative is deliberately planted so that the retail investors, in anticipation of higher returns from gold, might start buying gold heavily and allocate a lot more asset towards gold and make it a reality wherein the gold prices actually touch $15,000 an ounce. And at that point in time, the US government actually does this balance sheet adjustment by saying that the current market price is $15,000 per ounce, but the earlier evaluation was different. So the adjustments can be used for cash equivalents. How does the Indian government treat gold? Is it similar to that of the US, where gold can be adjusted as cash equivalents? In the US, so far, the claim is they have never accounted for the current market price of gold. But how is it in India? Does our government also not evaluate gold price regularly and adjust its value in its account books? This we will discuss in our next section. Stay tuned.